From our perspective, Bitcoin is a public good. I call it the financial superhighway, and the most significant thing to us is that we offer the cheapest access to encourage as many individuals as possible to take part. And looking back, what we think will be regarded as a revolution in money and financial services. Right now, a Bitcoin is worth $67,341.12. Bitcoin had flirted with an all-time high earlier in the week before falling by 12% and then rising again. Investor Cathie Wood is upbeat in the face of this volatility and thinks Bitcoin is only beginning to reach its enormous value. Cathie said in a New Zealand Herald interview that she thinks Bitcoin will reach a price of over $1 million really soon. With the halving of Bitcoin fast coming, Cathie thinks the price will soar because of the higher participation than it did 4 years ago. Eventually, she believes institutions will embrace Bitcoin once they see its promise as a risk-off asset. Cathie believes that after institutions adopt Bitcoin, governments will do the same, pushing the price of the currency to $1 million per coin. Do we concur with Michael Saylor that in the end, this category, could Bitcoin and other cryptocurrency be more valuable than SPY? We do, in fact. Most definitely we do. And of the whole ecosystem of crypto assets, Bitcoin alone will be the largest component. We project it to be valued $20 trillion by 2030. How much of that $20 trillion then will ETFs receive? I don't know, but when you stop to think about it, that already circles around SPY, the top stock, and I guess the current market value of all public stocks worldwide, regardless of wrapper, is approximately $120 trillion. $20 trillion by 2030 is therefore a very large category. With the halving, the annual increase in Bitcoin supply will drop from about 1.9% to 0.9%. We shall so experience our first decline below 1%. And you will see that the average supply growth has been about 1% if you look at the very long history of gold. Bitcoin's supply increase is therefore currently slower than that of gold. That is, I believe, a turning point. Another difference is that mining typically reacts to increases in the price of gold by increasing supply as well. Bitcoin makes such impossible. Thus, the dynamic is rather different. The halving is hence that turning point. And historically speaking, Bitcoin has typically performed really well following halvings. Now, that doesn't happen immediately. It doesn't happen immediately for whatever reason I don't know. With ETFs making the market more efficient, it might be possible, given how many people are aware of the halving this time around, when 4 years ago they were unaware of Bitcoin at all. Who knew what it was really? And if I may just add one, and each of these phrases is significant in terms of how we try to characterize this monetary revolution. The first, worldwide, crucially private, digital, decentralized, rules-based, digital monetary system in history. My mentor and many others are familiar with Art Laffer for his economic policy, Laffer curve, and other works. He studies money as well, and he added, "I've been waiting for this for 50 years, ever since they closed the gold window here in the United States in 1971. Apparently, something really significant transpired the previous year. Regional banks in the U.S. collapsed in March 23rd, some of them went insolvent, and Bitcoin skyrocketed. 19,000 became over 40,000. That demonstrated what? That proved Bitcoin lacked counterparty risk, which banks do. It so turned into a risk-off asset. It was simply an asset with risk to us before. Bitcoin will stand to gain greatly when liquidity is abundant. But this notion that it is also a risk asset, and as we intend to demonstrate in our own new asset class paper, white paper, its correlation with other assets is so minimal that institutions have a fiduciary obligation from an asset allocation point of view to at least examine it. And Vanguard dismissed it, so be it. But we believe Vanguard is, well, doing one of two things. Vanguard is treating this like a commodity because it has never invested in commodities. Mostly that hasn't changed. However, we believe that Vanguard will be denying its clients access to a new asset class that, should the correlation of returns remain low, will result in higher returns per unit of risk and enable individuals using it to outperform Vanguard advisors. There will therefore, in my opinion, be a demand pull even for the Vanguard ecology. We developed in that target before the SEC approved us. And it, in my opinion, was a significant turning point that advanced the schedule. One thing I will say, no wirehouse, not even Morgan Stanley or Merrill Lynch, BofA or UBS or Wells Fargo has yet accepted Bitcoin. All of this price activity then occurred prior to their approval of Bitcoin. We've hardly started, we aim higher than that. It's well above that, as our aim is 2030. The added price that we assume for institutions has also more than doubled with our revised assumptions for institutional involvement. We don't know how quickly some of the more independent registered investment advisors in the United States, those platforms are claiming, give us 3 months to perform our due diligence, so I don't want to disclose any specific pricing. The others argue we need at least 6 months. I would also classify those as institutional.